So appreciate the opportunity to speak today. Ryan Weber with our Marsh energy practice. I lead our public power segment headquartered in Houston, which is where our energy practice is. 6,000 employees across the country. Our energy practice is made up of about 200 colleagues, Houston being our hub, but San Francisco, LA, Chicago, New York is how we're structured. And we do all things power and utility, but my focus is the public power vertical. I want to give a plug to Doug. They do a great job with MPUA on their cyber hygiene and resulted in nearly half their premium on their cyber insurance renewal this year to be cut in half. So they do great work, and a client that we share mutually reap the benefits of it. So continue to love the partnership with the vendors. As I mentioned, I'm in Houston, 2 kids. I don't understand why I live in Houston. So far this summer, we've had a torrential storm, a hurricane, and I think the average heat index has been like 115 over the past month. So
how long did you lose power?
I was a 3-day, so luckily my part of the city wasn't as affected as others. So it was it's pretty scary though with that heat and no power. I think Centerpoint has some lessons learned. Okay, so just want to talk about, and this has been a common thing, a lot of the risks and challenges our clients are facing. Environmental issues continue to be a challenge, whether you have coal in your portfolio or asset base. A lot of the insurance carriers are now putting on a PFAS, environmental insurance exclusion, which PFAS is essentially the forever chemical. You find it in everything, whether you're cooking with the hardware or it could be in a power plant. So insurers actually are thinking this could be the next asbestos phenomenon. So they want to limit their exposure. Renewables being the common theme, those who want to integrate more of their battery storage or looking at building a solar plant. You know, the days of an insurance broker just putting the renewal to bed and then kicking it up 9 months, those days are long gone. We really need to be an advisor for our clients throughout the year. For instance, on a project, when they're looking at a solar project, we have the ability to risk engineer it, map it out, see if it's a good site layout, site plan, whether it's in a floodplain, whether it's in a cat exposure. All those things we can do to help our clients make the best informed decision on if it makes sense to do something. I know battery storage was talked about earlier today. You know, the spacing on the units, whether it's 3 feet or 6 feet. Some insurers won't even provide insurance coverage if it's not the ideal design that they need in order to provide those insurance capacity. Retaining talent, you know, it's competitive out there. Investor-owned utilities, co-ops coming in to poach talent. What we're doing, we're trying to make the employee benefit side of the house, the employee benefit healthcare plans, as rich as possible. Maybe getting clients to offer key man insurance, entice them different ways if they can't do that with the salary or compensation. Maybe there's other carrots we can pull in order to keep the client. Aging infrastructure. This is big. We have a lot of clients who have assets that are going to be going offline, decommissioning. So then why are you still insuring it the way you've been doing it year over year? Maybe there's unique and creative ways to structure the insurance on the property and the liability side to really meet the changing and evolving landscape of that particular utility. As I just mentioned, cat-prone areas. So whether you're in Florida being in a hurricane zone, California susceptible to earthquake and wildfire. All these are significant challenges for not only utility clients, but insurers as well. We're seeing a lot of insurers pull out of states to offer coverage, specifically, for instance, homeowners insurance in Florida or California. We haven't seen so much of that on the commercial insurance side, but it could be coming. So there's always things we need to help educate and inform our clients on what might be coming down the pipeline. Cyber's been around for a long time, but we continue to see it evolve. AI was discussed earlier today. What we're seeing a lot of those are public power clients who are hiring these third-party vendors. And we need to make sure those vendors they're hiring have the proper insurance in place. Because at the end of the day, if something were to happen, we don't want that to fall on the public power's insurance program. We want to have that proper risk transfer in place. New competition coming in, whether it's an investor owned or somebody like Tesla starting an electric utility, all these types of things are coming into the fold. And then I know I touched on wildfire. I mean, it's becoming probably the #1 topic for the liability aspect of the utility. And it's not just California and the western states. We're seeing a lot of insurance carriers now focus on states such as Florida. Because once again, a wildfire can start like that, whether it's a down line. And fortunately, we have a dedicated practice that can help with wildfire modeling, understanding a utility's true exposure, and seeing how we can help save with costs and the limits out there. So a lot of the common things we've heard about today. Here's just a few examples of some recent claims we've seen over the past 18 months amongst our APPA clients. In the Pacific Northwest, we had a client whose one of their subsea cables was damaged by a ship anchor, so that had to be replaced. We've had numerous equipment breakdown turbine situations in their power plants where that's hadn't been worked on, and that's an insurance claim on the property. A few cyber ransomware incidents, but from the power and utility standpoint, especially the public power space, it's still a good risk. So we don't see far as many claims as retail and healthcare, but cyber is always going to lend in challenges. Unfortunately, we had a large public power earlier this year, had a worker suffer a fatality because of touching a T&D line down. So those situations do happen. A substation was shot up in the last year. That was on the news. Substation security that was talked about earlier today. And then your cat-prone areas such as flood, hurricane, wildfire, those will always stay top of mind. And then last week I had a utility in the Midwest where their own employee drove an auto into their building. So they asked if this could be covered under the auto insurance. No, it could not, because it was their own auto and their own employee. If it was a third party, then yes. So not only was the damage below the property deductible, but they were SOL on their auto as well. So those situations, you never know. Insurance is never a dull moment. And then outside of your traditional normal insurance that a public power member buys, such as property insurance, general liability, auto, environmental, cyber, public officials, we are seeing an uptick in some of the unique insurance products that really have taken shape this year. So trade credit insurance, that would be for a utility to buy on a customer of theirs who might be at risk for insolvency or maybe bankruptcy. So you can essentially take out an insurance policy on them. If they were to go belly up, you can recover your receivables. Power outage and contingent outage insurance, those are for utilities that there's a power outage, but not physically directing their site as far as a tornado or hurricane, but now they got to go on the market and try and replace it, so you can buy an insurance policy and tailor that. One of the key ticket items this year is using surety bonds. So it's not essentially for the utility to use their own surety bonds, but we're seeing a lot of renewable developers in their territory, in their region, looking to develop a solar farm battery storage. So instead of using the traditional LOC, we've been coaching our utilities as well as the developers to possibly use the surety bond as an instrument to get the deal going and not let construction get held up. And then parametric, it's kind of the new fancy word. We haven't had a client buy a parametric policy yet, but it could be coming. It's where you have your location of your physical assets. You draw a big circle around where your exposure is, and then you can create a policy where windstorms from a hurricane get to a certain level, or if you have certain drought or even a quake, you can be creative. You don't even have to have physical damage to your location, but if the wind speed triggers the policy, it's an automatic payout. So things like that. So because insurance costs have continued to raise over the last really 3 to 4 years from COVID now on, our clients are looking to get creative and look at ways to help mitigate costs, but maybe there's a way to get creative and kind of not do the traditional insurance buy as they once done. They're evolving, their insurance program need to evolve. Any questions on the insurance front?
Sorry to ask a question before lunch.
No, all good.
So on the consumer side, I feel like I can't go a day without somebody identifying a new risk that I haven't thought about, and then introducing another policy that they should be purchasing to manage something. So for public power, how much are you seeing in terms of a proliferation of new insurance products that may or may not have risk tied to it, as opposed to I mean, what's a credible buy versus not necessarily a credible buy? What's going on?
Yeah, no, great question. I think it's just the risk tolerance of the particular utility, how big you are, how sophisticated you are, what's your rainy day fund look like? Does it make sense for that insurance premium spend on the limit you're going to get? and what's the likelihood of really the severity of the type of event. So it really just depends on the coverage, what you're looking for. I will say though, if you're looking to insure something, there's probably some type of insurance product out there. And I mean, it's our job as your insurance broker to educate you on what might make sense. We take the approach of maybe it's not something you'll buy this year, but let us show you what it will cover, what are the risks involved, what the pricing would be, and maybe down the line, you have that board member, why are we buying this? And then you kind of already know the budget for it, but it's really a case by case and internal decision on what needs to be bought and what doesn't.
Thoughts, Cyber, this may be the both of you, is your thoughts on ransomware, to pay, not to pay?
Yeah, I mean, it's kind of the number one topic because there are a few states now have that kind of, I think, banned it, which is Florida and North Carolina. There might be some more that are coming down the pipeline. The one thing is the cyber insurance policies we sell to our public power clients, the limit you buy, you're gonna have the full ransomware limit of the payout. And one of the great things about the cyber policy is you get all the tools and resources that come with it. If you have some type of event, the policy is going to be able to provide the hotline and the resources of vendors who already know, they already might know who the bad actor is, already set up the Bitcoin account and how all that works. I think it's also an internal decision going back to if you insure it or not, whether to pay or not. That's kind of more the legality of it, but the cyber insurance we sell and the public power members that buy insurance, they have the ransomware limit at the full limit they buy. But it's evolving. Things might change. States continue to say you can't pay it. And if cyber insurance carriers offer it, and then you carve out that coverage, or you get the credit, but you don't want a situation where ransomware is also linked to some of the other insuring agreements and the cyber policy. So you really have to make sure that your cyber insurance is how you want it structured. Not trying to get too far in the weeds, but good question.
So when you're looking to build a new project or kind of assessing the risk benefits of new capital spend, how early should you bring in your insurance broker from that perspective is going to be using assessments of what you're thinking about?
Great question. Yeah, I think earlier the better. I mean, if there's plans to build some type of new renewable project a year out, bring us in, because we're going to be able to offer a lot of value, such as, once again, risk engineering and mapping. Does that site make sense? Is it insurable there? We're also going to look at who you might hire to use to build that project. Is it an internal build or you're hiring a third party? And does it make sense with that contract? Do you really run their insurance, or you, as a project owner, you carry the insurance yourself? So we never want to be last minute to the table. Sometimes it does happen, but that's why it's important. It's our job to understand what you guys are looking at, strategic plans and things of that nature. But I mean, 6 months, 9 months out from a project, we want to be working with your risk department, the financiers, the procurement. We want to be there for anything insurance that comes up. We want to be as your advisor to make sure once shovel's ready to go to the ground, insurance is involved. So the earlier the better. Unfortunately, it doesn't happen all the time, but we know from who you guys are. Maybe you have a pair across the country that has suffered some pain points, and we want to be able to provide those insights on your project just to create a thought process to get it done.
Dinesh has a question.
Yeah.
Just as utility models are changing, they're all offering new services like managed EV charging and credit control DER and so on. Are there specific insurance products for those kind of services that we've seen? Had conversations with utilities about managing some of that risk?
Well, I think a lot of the insurance carriers who insure you guys, they do rely on public power utility space to be educated on these new technologies and what's going on. I mean, for instance, battery storage, a lot of the projects that were maybe looked at 4 years ago, all that technology's kind of changed now, right? So it's important for us, for the clients, for the industry to keep the insurance carriers educated on what the real risks are for insuring a project or a new technology. And you know, a lot of the data and analytics doesn't exist because if it is a new technology, how do they know how to underwrite and develop the price point? So it's kind of like everybody's holding each other's hand, teamwork approach. But there is some of that new technology and makes some insurance carriers a little bit scared. It also makes other insurers kind of excited to jump in there head first and get more market share, so it just depends. I don't know if that really answers your question or not, but it's a team approach.
This has been a production of Hometown Connections. Thank you for watching.